Hello everyone, welcome back to our channel. In this video, we'll talk about IPO, which is nothing but initial public offering. In this short session, we'll cover every aspects of IPO. Whether you are a beginner investor or an experienced market participant, this video will take you through every aspects of IPO from the basic to advanced analysis. So why to wait? Let's dive in. Here is what we'll cover today, starting from IPO fundamentals, types of IPOs, the IPO process involved, key IPO terminologies, what is grey market premium, how to check the grey market premium, what are the IPO risks and pitfalls, how to analyze an IPO, what are the key strategy to be followed by investor to have higher chances in the allotment process without any rejection of the application, and finally takeaway messages from it. So what is an IPO? IPO is a process by which private company offer its share to the public for the very first time. Listing their company through IPO is one of the biggest milestones for any company. In India, IPOs are regulated by SEBI and shares of the company are listed on either NSE or BSE or in both. In this process, the company transits from private company to public. Then the immediate question arises, why the company goes public or come up with IPO? Companies go for an IPO for several reasons, that is, either for capital raising, for brand building, or for exit strategy. In the case of capital raising, the company raised large amount of funding from the market, which can be utilized for business expansion plan, for funding research and development projects, for reducing existing debt, and also for salary of the employment as well. After IPO process, the company will generate brand building, it can gain public recognition, it can enhance the company credibility, and it can attract also top talent across the globe, and it will improve the market positioning. And in this process, it also provides an exit strategy for early investor or the promoter of the company, and it provides liquidity to founder as well, so that if in case of emergency they can sell their share and can exit from the company as well. It also creates wealth for employees and also establish market valuation. In India, there are mainly two types of IPO issues. One is fixed price issue, where a single price is set before the subscription period, whereas in the case of book building issue, the price band is announced and investor bid within the range. We also have the offer for sale route, where existing shareholders sell shares directly to the public. And most commonly, this book building IPO is preferred as compared to fixed price, but there are some cases where fixed price IPO is also there. Then the next is how the IPO process goes on. The IPO process follows these steps. First of all, there will be decision to go public by the board of the company, then appointment of intermediaries like merchant banker and registrar, legal advisors. They file the DRHP with SEBI. Then SEBI review their DRHP filing process and approve the paperwork. After that, the price band and lot size is determined. Then the bidding process happens, and there will be allotment after the bidding process. If you will get lucky chance in the allotment, then the share will be credited to your demat account, and if not, the money will be refunded to your bank account. If you do not have any demat account yet, you can check our previous videos in which we have clearly compared the various types of broker there in the market. Then once the allotment process is completed, it will be listed on either NSE or BSE. This process ensures compliance, transparency, and fair access for investors. Next, we will learn about few key IPO terminologies like the face value. Face value is the nominal value printed on the share certificate, such as rupees 10, rupees 1, rupees 2, or rupees 5. This usually is decided by the company and usually printed on the share certificate. Next is the issue price. This is the price range at which the company offers its share to the public in the IPO process. Then you will come up with another terminology, that is market lot or minimum application size. Market lot is nothing but the minimum number of shares to apply for. So at least one lot you have to apply instead of one share, that there will be one lot in which based on the price there will be decided number of shares. It will be clear in few minutes. Once we will go through everything how to analyze the IPO, this terminology will be cleared. Then you will come up with another term known as oversubscription. When the number of share applied exceeds the number of share offered by the company, then it will be termed as oversubscription. For example, if you are selling 100 share of a company, then if the demand is 200, then the subscription will be oversubscribed. Whereas if the demand is less than that, it will be under subscription. The next terminology is the anchor investor. These are usually large institutional investors who invest in an IPO before it open for the public. And there will be a fixed time duration within which they cannot sell the share. Next is the grey market premium, that is the unofficial premium at which IPO shares traded in the grey market before the listing. We'll learn more about this grey market premium in the next slide. So what is this grey market premium? The grey market premium is an unofficial indicator of how a stock might perform on listing day. If the IPO issue price is 100 rupees and the grey market premium is 50 rupees, then the expected listing price could be 150 rupees. But remember, GMP is not regulated and can be misleading if relied on it alone. Then how this GMP works? The investor trade IPO share unofficially in the grey market at premium or discount, reflecting market sentiment and expected listing performance. So if it will have positive GMP, then it is expected to list at a higher price than the price offered in the IPO process. And if it is negative, then it is estimated that the price at which it will be listed will be lower than the price at which it is offered. Next, then where to check the live GMP rates and grey market trading information for upcoming IPOs. There are several sources, such as you can check the Chittorgarh website, which provides real-time GMP tracking. Also, you can monitor IPO Watch, another website, which also offer grey market data. Also, you can refer financial news website for the report of GMP trends. This GMP indicates market sentiment before even official listing. So this is important parameter if you are interested in an IPO. It also helps in gauge the expected listing day performance. It reflects institutional and retail investor confidence. So if there will be positive GMP, then go for the application process, or else avoid the IPO. And you have to remember that this grey market is unofficial and are unregulated. So there will be a lot of fluctuation might arise in some cases in the case of GMP, and the actual listing price may differ significantly as compared to the GMP. Then the next question, how to analyze an IPO. First of all, you have to go through the RHP, which is nothing but red herring perspective, and you have to learn about the company, what the company do, which segment the company is there, check the company's financial performance and the growth aspects, understand the sector outlook, compare valuation with peers, that is P/E ratio or price to book value ratio. Also access the debt to equity ratio and return on equity, and monitor promoter shareholding pattern as well, and also analyze the grey market premium. Then the next question, where to get all this information from? For that, you can go to your browser and can type this website. It is Chittorgarh, you can type. Then this yellow logo you can see, this is the website I am talking about. Once you click on that, you just scroll down, you can see this left side, these are the main board IPO. Here you will get all information about the main board IPO. Suppose you want to analyze a particular IPO of your interest, then just you have to click on the particular IPO. For example, here I am taking Bikram Solar into consideration. So once you click, then page will appear in which you will learn about everything about the IPO in brief. So here in the IPO detail section, it will give a brief introduction about the company, like what are the type of issue and all. If you see, this Bikram Solar IPO is a book build issue, Book build issue means the price, there will be a price range in which the share will be traded. So you can see, check here, the issue price band is rupees 315 to 332 per share. So remember, for applying IPO, always bid at higher price level. Don't consider the lower price level. And also the issue is a combination of fresh issue. So if you just click, if you do not know the meaning of the term, then you can just put your cursor there. It will show what does the fresh issue means. The fresh issue refers to a company issuing new share to raise fresh capital. Also, there will be offer for sale of 1.75 crore of share aggregating to 579 crores. So it is a combination of both fresh issue as well as offer for sale. So in case of offer for sale, as you know that I have discussed earlier, few of the initial investor or the promoter of the company, they want to share their sale to the public. So that if there will be offer for sale, then you can go down and check the shareholding pre-issue and post-issue. If there will be offer for sale, after the shareholding pattern of the company will change. You can see in this company from 77% it will be reduced to 63%. That suggests there will be some promoter which will sell their shares. Okay, coming back, you can see the few details about the Bikram Solar IPO details. That is what is the IPO date, what is the face value of the company, what is the lot size. Yeah, so lot size means in one lot you have to apply for 44.5 shares, and this is a fresh capital plus offer for sale issue, and it will be listed on both NSE and BSE. For the retail participant, the investor can bid for a minimum of 40 share and multiples of thereof. So for one lot, it will consist of 45 share, and you have to pay around 14,940 rupees for this share. And maximum you can apply for 13 lot, which up to 1,94,220. If it will be more than that, then those are considered as small HNIs. And next you can see the Bikram Solar IPO reservation for qualified institutional broker. It should not exceed more than 50% of the net offer. For retail participant, it is 35% of the net offer, and for NII, it is less than 15%. Then coming down, this is the most important section of the IPO. You have to go through about the company. So if you expand this, here you can get a glimpse of the company core operation and where are the manufacturing facilities and all. So as you can see that for the Bikram Solar Limited company, the core operation is solar photovoltaic module manufacturing, engineering, procurement and construction service, and also operation and maintenance of the solar cell. And the manufacturing facilities are located at Kolkata and also is in Tamil Nadu. As of March 31st, 2025, they have 1612 employees and 974 contractual employees are there in the company. Next, coming to the company financial, this is also the important parameter for considering an IPO. You have to see that the assets of the company should grow, the revenue of the company grows, that is the total income of the company should grow, there should be profit, there should be a growth trajectory in the profit, net worth, reserves and all. So as you can see that the asset of this company is subsequently growing. Also the total income of the company is growing. The profit after tax of the company in 2023 was 14.5 crore. It has increased to around 80 crore, then to 140 crore. So the profit of the company is increased significantly within this period. That is a positive point for the company. And also you can see that the reserve of the company is also increasing. Here they have not mentioned the debt of the company, but you have to check in the RHP, everything will be there. And also very key performance indicator of the company is shown here, that is the ROE, ROCE, debt to equity ratio and all. The ROE is positive. If it is greater than 20, it is expected to better, but it is around that. ROCE is good. The debt is minimal, and profit margin is only 4%, and price to the book value is around 8.46, and the EPS of the company is, after post IPO, it will be 3.87. Then we can compare IPO with the with its peers. To check the IPO peer comparison, you can come here and click on this. Then one tab will open. You can go through there. Here you can see the Bikram Solar IPO peer comparison. These are the various companies like Vari Energy, Premier Energy, Websol Energy System. They also work on the solar segment. So these are their peers. If you see the EPS of this Bikram Solar IPO, it is around 4.61, which is way lesser than the other industries. And if you see the net asset for value, that is NAV, that is also lower. If you compare the price to earning ratio, here you can get around, the PE is around 85, which is way higher as compared to its listed peers. It is very expensive as compared to the listed peers. If you want to go in detail about the comparison, you can click here, read the detailed review. That is the review by Dilip Davda. So in which he have written a blog about the company, about the company, their issue details and financial performance, dividend policy, comparison with listed peer, everything you want to learn. And finally he also gives some conclusion. So as expected, the the price to earning ratio of this company is way higher than its listed peer. So if you come here, as per the offer document, the company has shown Vari Energies, Premium Energy, Websol Energy as their listed peer. They are trading at PE of 37.6, 42.8, and 30 on August 13, 2025. However, they are not truly comparable on an apple-to-apple basis, but still, it is, the PE is way higher than that. Then, what are the key strategy to be followed for retail investor to have maximum chances in the allotment process? Always apply at the cutoff price. Use multiple demat account within the family to increase the allotment chance. But remember, do not apply from multiple broker. Like if you have account with, for example, Zerodha, Angel One, or Grow, then all are registered with same PAN number. So one PAN, one application. Don't apply with single PAN card from multiple account. So that will give rise to cancellation of your application. And also avoid overhyped, overpriced IPO. As we have seen that this solar IPO we are describing about, it is overpriced because the price to earning ratio is very way higher than the listed peer. So you can avoid such type of IPO. Don't apply from multiple broker with the PAN card. This point we have already discussed. And if you are only interested for listing it, forget everything. Monitor the GMP and subscription data, and exit on the listing date if the fundamentals are weak. Okay, for monitoring the GMP, again you can go back to the same website, the Chittorgarh website. There we can see. Okay, here you can click the IPO gray market. You can see here. So if you click, one website will come up. There it will show the gray market premium. It is expected the GMP is around 63 rupees, around 19.13 percentage. It is expected to list at a premium of around 19.13 percentage. But remember, it will change. If you click here, how the GMP has changed over time, you can see from here. Initially it was 69, now it has decreased to 63.5. So apply on the last day of the IPO. If the GMP is more than 30%, consider the IPO, or else you can avoid the IPO. Okay, next, if you are interested for long-term holding, focus on fundamental strong companies with clear growth story. Yes, this company, which what we have analyzed, there is a strong fundamental, and also there is clear growth, but it is expected to be listed in a premium category, so you can wait, and once the price will cool down, you can think of entering in the or buying the fresh share of the company. If the listing price is inflated, wait for correction before buying. Yeah, this point I was talking about. Okay, finally, what we understood, what are the takeaway messages? IPOs can be exciting opportunities, but they come up with its own risk. Always evaluate the fundamental valuation and market sentiment before applying. The strategy for short-term listing gain is different from long-term wealth creation, so choose wisely. Invest smart, stay informed, and protect your capital. Thank you for watching this session on IPO. If you found it valuable, do like, subscribe, and share with others. Stay informed, invest wisely, and see you in the next session. Bye bye.